Hey everybody, Rob Maurer here, and today we've got some new numbers for Tesla out of China. We'll also take a look at Rivian's earnings, always interesting to see their progress. We've got an update on Tesla Energy and a couple other items as well. Starting off with the stock, Tesla continuing to hold up okay after the Kirkhorn resignation, finishing down 0.7% on the day today to close at $249.70, while the Nasdaq was down a little bit more, 0.8% on the day. After yesterday's episode, we did get just a little bit more information from Elon on Zach stepping down. Holmar's saying that sounds like he got a job offer somewhere else that he couldn't say no to. Elon replying to that, saying, quote, 13 years is a long tour of duty. Zach will spend time with friends and family, then do something else, end quote. So despite what seemed to be a somewhat sudden announcement, still signs here of things being amicable. All right, let's move into the China numbers. We've got new insured vehicle numbers, and then we also have monthly numbers for domestic and export sales for July. We'll look at the weekly insured numbers first. So from July 31st to August 6th, 12,800 Teslas were insured in China. This represents an improvement in the quarter-over-quarter pace. Now through 5 weeks, about 44,000 vehicles have been insured in China, which would be an increase from Q4 and Q1, about 28,000 and 34,000 respectively for those quarters, still a bit behind Q2, which was at 47,000 at this point. So last week, Tesla was pacing down about 10,000 vehicles, down about 25% for the quarter-over-quarter trend. That now improves to down just 3,000 and less than 10% for that quarter-to-date, quarter-over-quarter comparison. So this looks like a really strong number, and it is a good number, but we do have to add some context for the 5th week of Q2. Remember, that was in early May, and there was a holiday in China during that week. That was then actually the lowest week of the quarter, so no surprise to see Tesla gain some ground when that gets added into the comparison. All right, let's move on to the July numbers. Remember, we previously had the total wholesale sales for the month. That's the combination of retail and export sales, and the Model 3 and Model Y breakdown for the total figure. So domestic sales came in at 31,400, exports at 32,800, more than a 50-50 split towards exports, which is a little bit higher than we tend to see for an average quarter, but not unusual for the first month of a quarter, even with the unwinding of the delivery wave. More interestingly, I think, is that split between Model 3 and Model Y. We don't have it for retail or exports yet that I've seen. We should get that very soon. But for total wholesale sales, about 20,000 Model 3s, about 44,000 Model Ys. And this ratio isn't really any different than what we have seen over the last few months. So 32% of wholesale sales in July, Model 3. It's only 1% lower than June and 2% lower than the average so far this year. So no significant drop-off yet in Model 3 sales as we continue to watch for more evidence of Project Highland. Most of the reports had been for downtime in June, which obviously didn't seem to come to fruition. There hadn't been as much discussion in July, so not too surprising to not see Model 3 drop off yet. We'll get a much better understanding of that, though, when we do get the production numbers for July, which really should be any time now. And then, of course, we have seen these rumors about downtime or shutdowns or switching over production really increase now for August, which we're going to have to wait more time to figure that out, but between June, August, and July, I think July probably had the least talk of that sort of a transition happening. But the production numbers, when we do get those, will give us even more insight. All right, next up, we've got some interesting reporting on Tesla and API access for developers. Of course, whenever this topic comes up, it spawns conversations about Tesla possibly building an app store and things like that. Could be related, but maybe a little bit premature. So what the news is today is that Standard Fleet, which is a fleet data aggregator and management software that connects with the Tesla API to collect a lot of that data, similar to services like Teslafy, but each of these types of things has their own use case. So the news here with Standard Fleet is that they seem to be the first third-party app that offers official integration with Tesla and a single sign-on authorization with Tesla, which, as shown here in some images from Teslarati, allows users to log in with their Tesla account and then grant various permissions to Standard Fleet. They can then get access to the data without ever needing a Tesla account password or anything like that, and these permissions can be controlled directly on Tesla's website. So really what this is a more official, better security way of doing things that have been being done, API access for third parties, which is definitely a great step forward and can be a building block for more of those things in the future. But a lot of people see headlines about Tesla and third-party apps and think that that immediately means that they can go out and just build an app that's going to be downloadable in some Tesla store on Tesla vehicles, which although would be cool and maybe will come someday and there's plenty to talk about with that, that's not really what this is, at least as of yet. So just wanted to add some context around that, not to diminish that this is a nice step forward, but hopefully that helps with some understanding. Next, we've got a quick update on Tesla Energy. Energy Hub today announcing that they and Tesla are partnering to allow Tesla Energy customers to directly within the Tesla app enroll in Energy Hub's Connected Solutions program, which is a VPP or virtual power plant program that is offered in Massachusetts, Connecticut, and Rhode Island. Now, obviously, we have seen Tesla offer VPP programs in other states, so to me, without having all the information, it would seem that Tesla in these markets is favoring a partnership instead of operating the VPP themselves. This will still allow Powerwall owners to be rewarded for any excess energy that they have stored that can be drawn during periods of high need. So the customers will benefit, presumably Energy Hub will benefit. Not clear exactly if Tesla will share in those profits, but obviously it does make the Powerwall as a product more compelling. If you are a Tesla Energy customer in those markets, definitely feel free to share your thoughts in the comments today. All right, let's move on to Rivian earnings. They reported their Q2 earnings after market close today. Relatively muted stock reaction so far, although they did seem to beat on most metrics. And they did announce that they are increasing their production guidance for 2023 from 50,000 before, now up to 52,000. So not a huge bump, but adding that significant digit, which definitely makes it seem like they are a little bit more confident in where that figure is going to come in at. They also announced some significant improvements on their gross margin. Obviously, these are still challenging, significantly negative, but from the first quarter to the second quarter, they improved their gross margin per vehicle by about $35,000. And year over year, much more significant improvement than that. So if we look at the numbers on the far right, you can see this quarter, their gross profit, mind you, not net profit, gross profit was negative $412 million. So across 12,640 deliveries, that's a negative gross profit per vehicle of about negative $32,500. But last quarter, that was negative $67,000. Last year, it was negative $157,000. So still losing a whole bunch of money before even considering operating costs, but moving in the right direction and moving relatively quickly. If they could do another quarter with that kind of improvement, that would obviously push them into positive gross profitability. But still a long ways to go from there because, again, you got to cover the operating costs. Tesla probably had positive gross profit for basically its entire history for like a decade before actually net profit started to materialize. And although this was a dramatic improvement, it's coming from a really low bar. Losing $67,000 on every vehicle you sell, that's a big loss. And most of the progress is from amortizing it out over a greater delivery number. They lost $500 million in gross profit last quarter. Now they lost $400 million in gross profit this quarter. So if you look at it a little bit differently and say that this quarter they improved their gross loss by about $100 million, then they need to do that for 3 to 4 more quarters to get to gross profitability. That type of progress is more in line with what Rivian is guiding for. They're saying that they expect to reach positive gross margin sometime in 2024. So that alone shows that they don't expect to be making these $30,000 improvements every quarter. It gets a little bit harder as they approach positive gross profit. Then of course, you got to make enough gross profit eventually to cover your operating expenses. That for Rivian this quarter was $873 million. For context, that's about 45% of Tesla's operating expenses, even though Rivian sold less than 3% as many cars as Tesla did this quarter. That was, however, down from about $1 billion in this period last year, so making improvement, but still a long ways to go. So you've got the negative $400 million in gross profit, add that to the negative $900 million roughly in operating expenses. Rivian showed an operating loss this quarter of nearly $1.3 billion. But again, an improvement over last year's $1.7 billion loss from operations. As for cash, net cash from operations was negative $1.4 billion, negative free cash flow, $1.6 billion, with Rivian ending the quarter with just over $10 billion in cash and just over $11 billion in total liquidity. So still sitting on a decent chunk of cash. They did also improve their forecast for EBITDA. Now they expect to lose $4.2 billion this year in EBITDA from $4.3 previously, and they lowered their CapEx forecast from $2 billion previously down to $1.7 billion for the year now. So those are the financial takeaways. Progress, still a long ways to go, but they've got, a lot of cash left. And then we'll see if they have anything interesting to say on the call. I haven't had a chance to listen to that as of this recording. One other interesting detail from their shareholder letter, they did talk about their charging efforts. They talk about the adoption of Tesla's NACS, but they do mention that they continue to plan to expand the Rivian Adventure charging network and add NACS to those expansions. As we talked about at the time of those announcements, I think it'll be interesting to see what Rivian does because as they are a little bit more sort of adventure-focused brand, it could make more sense for them marketing-wise to have these charging stations in more remote locations that maybe Tesla isn't as eager to service, whereas the ROI for Rivian might not make a lot of sense, but it might be worth it from a brand building perspective, at least in their eyes, to fill those spots. And that would be good news for Tesla owners, especially if those are then NACS connectors. All right, last thing before we wrap it up today, just a quick look at the calendar since we didn't have a chance to do that yesterday. But we do have the Consumer Price Index, CPI, and Producer Price Index, PPI reports coming up later this week. Those will be before market open on Thursday and Friday, respectively. So definitely something to keep an eye on for later this week. All right, that'll wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on X at Tesla Podcast. And we'll see you tomorrow for the Wednesday, August 9th episode of Tesla Daily. Thank you.